Well, thanks for joining me today. Congress is in session, so watch out. According to the Kiplinger tax letter, Congress is on the move to increase government revenues. Now, Senate Democrats want to increase revenues by approximately $1 billion for their 2008 budget. This means you can expect to be paying more taxes in the very near future. Now, the name of the proposed legislation is the Fair Flat Tax Act. Of course, the name of most legislation is often the opposite of what it says. As with all tax overhauls, with this one there's winners and losers. First, the losers, which are just about everyone who currently pays taxes. The act would reduce the current 6 tax brackets to 3, 15%, 25%, and 35%. Well, on the surface that sounds like a reasonable idea, but the bad news is first, for low-income filers, they're eliminating the 10% tax bracket totally. Now, as bad as that might be, it gets even worse when you see the new breakpoints. For couples filing jointly, the lowest bracket of 15% would extend to $30,000. That's instead of the current breakpoint, which is at $63,700. So what used to be taxed at 15% between $30,000 and $63,000 will now be taxed at 25%, almost double. The 25% bracket will now extend to $120,000, which is similar to the current breakpoint of $128,500. From there on, filers will be paying much more in taxes. The 28% and 32% brackets will be eliminated, leaving a 35% rate on all income above $128,500. All in all, this is a very significant tax hike for rich and middle income taxpayers. The lower income taxpayers get a little bit of a break because to help offset the increases in the elimination of the 10% bracket, the Act raises the standard deductions to $30,000 for joint and $15,000 for single filers. This will help soften the impact of eliminating that 10% bracket. Now, one of the more puzzling things about this act is what it doesn't fix, and that's the alternative minimum tax, or the AMT. There's broad bipartisan agreement that something has to be done to index the AMT, but not much is happening with this particular act. The AMT was instituted to make sure that rich folks were paying their fair share. But the problem, as with any tax law that isn't indexed for inflation, is that the AMT is now ratcheting up the tax bill of many middle income taxpayers. I believe over 3 million people are now affected by the AMT. Now, of course, this act is going to increase taxes on the rich. And one sure sign that you are defined by Congress as being rich is if you have spent less than you've consumed and invested the difference. The act is going to eliminate the long-term capital gains and the preferential tax on dividends. Yes, eliminate it. Now, instead, it means that all long-term capital gains and dividends will now be taxed at ordinary rates. This means if you're a joint taxpayer and you have income of over $30,000 and you sell your mutual fund and have a $10,000 gain, instead of it being taxed at 15%, it will be taxed at 25%. If you're unfortunate enough to be in the $128,000 or above tax bracket, capital gains will now go from 15% to 35%, more than double what they were in the past. Now, I would expect this to negatively affect stock prices for several years. It's going to definitely mean investors will need to consider restructuring the way they hold investments in individual account versus retirement accounts. It also means that if you have appreciated stocks or property that you've been thinking of selling, before this act passes may be a good time to liquidate. For C corporations, it even gets worse. The 15% and 18% tax brackets would be completely eliminated, setting a flat tax on corporate profits of 35%. Now, this basically is going to triple taxes on small business owners with profits under $50,000, while leaving the big corporations totally unscathed. Go figure. Employees would have to pay tax on benefits that heretofore were tax-free. The Act's pretty much going to eliminate many of the perks afforded to employees of corporations, such as pre-tax life insurance, flex plans, workers' compensation, and company-provided meals and lodging. The fact that higher taxes are in our future really surprises no one. I mean, philosophically, the Democrats have favored more government services, which means more spending, which means higher taxes. If they're going to pass this act, though, before the election, it's going to need to happen very quickly. Otherwise, the voter memories will not have had sufficient time to fade come election time in 2008. My guess is that we aren't going to see any significant change in the tax law until 2008. Now, I could be wrong. But after that, it's going to be Katie bar the door.